10. So, Al, as we get into this next topic, we talk about it every week, and that's what everybody's always thinking about. It's retirement. When is that time? How do I get there? What's the best and the quickest way to get there? And what are the techniques and strategies that us as the average investor or the public can use? Now, I talked about earlier the smart money. They're doing, that old phrase, do as I say, not as I do. They're putting their clients into, now I'm talking about this, we're talking about brokers, advisors, the smart money. They control a lot of the money.
Sure.
They're putting their clients in different strategies than they are using in their accounts, right? And it's unfortunate. But we're seeing more and more people understand and realize there might be a better way. And, there's multiple assets that the public wants to learn more about. It's the futures market, the Forex market, and the options market. So they're not stuck to just stock and that swear word, mutual funds. Now, let's talk about how we can use those other assets in our retirement accounts.
Well, we talked before about one of the goals of the proper education would be to have our students think, act, and execute like the smart money, like the pros. And one of the ways that you're going to do that is to utilize assets other than what they are putting most of their clients into. If you think about it, most clients of financial advisors are in mutual funds or maybe some individual stocks, but what the companies are doing themselves, they're trading, sure, they might trade stock, but they're also trading in the futures market, in the foreign exchange market, and in the options market. And there's a number of reasons for that. These are what we call leveraged assets. In other words, every dollar that is invested in one of these leveraged assets is actually controlling a multiple of that dollar. It may be anywhere from maybe a 10-to-1 leverage to 100-to-1 leverage. And that's maximizing the value of your money. It's capital efficiency, I guess, is a great way of putting it. Those assets also have great liquidity, so it's easy to get in and out of them, with a very small difference between the buy and the sell price. And then they also have great diversification. Futures, for example, where we're looking at a number of different markets within the futures world, where we're looking at what something's going to be worth in the future. And you can trade within that world. You can trade the major stock markets. You can trade commodities. You can trade, and I notice I didn't mention your favorite, but let's bring it up.
Let's hear it. Lean hogs.
Lean hogs. And all the other commodities, the soft commodities, corn, sugar, soybeans, the things that companies like Cargill and General Mills, they do futures contracts on these all the time. So airlines do futures contracts on jet fuel, on their fuel. You can participate. The great thing is that they have kind of developed this market. We can participate as investors and traders. So you have access to the major stock markets, to the commodities that I mentioned, oil, the precious metals, gold and silver, currencies, interest rates, a number of those things. Within the futures world, you have assets that are correlated with, for example, the stock markets, the Dow, the NASDAQ, the S&P 500. There's stock market correlation there. You have things that are non-correlated. Sugar, for example, in the S&P 500, there's no correlation there. And there are some things that are inverse correlated. Gold, for example, in the stock market. So you have a number of different opportunities within the futures world, probably the best truly diversified asset grouping that there is. And it trades almost 24 hours a day with great leverage.
Think about that. If you could trade any time of day, how could that impact you? I mean, most people work during the day.
Sure.
Now, there's another market that's also open 24 hours.
Yes, there is.
What is that?
That is we call it the Forex market. It's the foreign exchange market. And anybody who has traveled internationally and has actually exchanged U.S. dollars for a foreign currency and then exchange that foreign currency back to dollars when they have come back in this country, you've really participated in that foreign exchange market. It's looking at the difference in exchange rates between two different currencies. So it's traded as a pair. It allows people to participate globally in what's happening in the markets. It's a great asset to use both for your shorter term needs and long term. A Forex can be used long term for your retirement accounts. Futures is a great short term trading vehicle, and you've got options which can be used short term, mid term, medium term, and long term. And options can also be used to manage a long term stock portfolio. In other words, it's sort of like putting a supercharger on your stock portfolio.
Yeah, I want you to explain that a little bit more coming up here next. But I mean, we have so many people that we talk to. I was talking with some friends this past week, and they were talking about, well, I've never heard of the futures market. I've never heard of the
Sure.
Forex market. Well, that's by design. The institutions, they don't talk about it on TV. That's what they're using. Remember that saying, do as I say, not as I do. What is Warren Buffett always telling people to get into? He's telling people to buy stock. What is he doing, Al? He's always trading options.
Sure, he makes $7 to $8 billion a year trading options.
And that's why they say the things they say, because they need the public to do the things they do. They need volatility in options. And we're going to cover that next. Al, we talk about these other assets in retirement accounts. And most of our listeners are probably listening, probably in their garage, maybe changing some brakes or sitting at home with their the husband or the wife and having a cup of coffee right now. And they're probably wondering, how do I do that? Right? How do I participate in these other markets if I have a 401k or if I have an IRA? Well, here's the great thing with IRAs. If you have an IRA, that's your money.
Right.
You can self-direct that. And it's a process where you just roll into a self-directed account. Talk about that process, but why it's so phenomenal to be able to be the steward of your own money.
Yeah, well, let me first of all kind of compare that to a typical employer-sponsored retirement plan, like a 401k or 403b. That is where your employer is providing this plan through a sponsor, through one of the Wall Street firms, where they're giving you a choice of a number of, typically it's mutual funds, maybe some ETFs, which is an exchange-traded fund, and we talk about those in these classes, maybe some stock, but a limited number of choices there. And really very little advice or counsel. They're really just saying, okay, here's our 401k structure. Here are your choices. Good luck. And basically, they're charging you a fee just for kind of storing your money with them. You're making the decisions. You're making all the choices for the most part, for most of you. And we always ask in our classes, how many meetings people have with their plan sponsor every year. And typically, it's 0. So you're already making the choices there, and you're paying somebody else for the right to make your own choices, which doesn't
make any sense to me. You're confusing
sense.
me here, Al.
Yeah, sorry. Well, that's. I was going to say that's not easy to do, but I have to take that back too. No, I'm kidding.
But that's the common thing,
Obviously,
though.
sure.
People don't feel like they have that choice. They are making those choices,
Exactly.
but they're paying somebody to do that for them when they can do it themselves.
And those fees, we talk about the fees often, Josh, where over the course of your investing life, while you're working hard, putting your money into these retirement accounts, if they're charging you a couple percent, and 2% is really on the low side, but over the course of maybe 30 years, you could be looking at hundreds of thousands of dollars lost to you because of the loss of compounding of every dollar that's taken out in fees. So a self-directed IRA, you eliminate the fees right off the bat. You are eliminating a big chunk of what could be lost to you. We always look at your financial components in 2 buckets. One's kind of your income bucket. That's where you're going through your accumulation phase while you're still working. And then a retirement bucket. That's what you're going to rely on when you retire. Well, if you take a bucket and someone says, here, go fill this bucket up with water, and there's a hole in the bottom, you may never get that bucket full. Or it may just take a long time to actually get it up to the point where it's full. If the bigger the hole, the harder it is to fill that bucket. That's the same thing in your retirement accounts. That hole in the bucket, your retirement bucket, are fees, and also anything that you. Well, here's the thing: with a 401k, 403b, you only have the potential or the opportunity to benefit if the market goes up. What if the market is not going up? If it's going down or it's going sideways, you're still paying fees, and there could be a loss. That's one thing when you go in retirement. You can't let that happen. You can't let somebody else end up with the money you worked so hard for. So you need to make sure there's no hole in that bucket. Eliminate the fees. Know how to participate if there is a correction or a bear market. There are strategies that you can use. Actually, you have the opportunity to do better in a down market than you do in an up market. Again, that is if you are prepared for it. In other words, if you have the right education.
And that's the key, Al, is the right education. But we're seeing more and more people that want to have more choices. And if you're stuck paying these fees to make these choices yourself anyway, think about that. Does that make sense for you to pay somebody to do what you ask them to? Where when you self-direct, that basically means you direct that you click the button yourself. then you have the opportunity to lower those fees. And that could be a big difference over a lifetime. And if you want to learn more, you have to have the proper preparation. That comes with what Al's talking about every single week, the proper education. So, Al, coming up next, we got a couple different topics. I want to continue the discussion on retirement plans, and how to get started. This is Josh and Al with the Retire Young radio show. We will be right